Hello, Mr. Ma right here, and I especially welcome you all to the discourse and welcome to today's episode titled Investment. Let's delve right into what we have for today. Investment. You see, investment is the most complicated aspect of personal finance. It is one of the areas where people get the most professional advice because there are vast differences in risk and reward between different kinds of investments. That's why you see most people seek out for help with this area of their financial plan because I mean the differences between risk and reward are cumbersome. So you need to seek out for certified professionals that are financial advisors to help you draft a feasible investment plan, to help you draft a feasible, realistic financial plan for your investment. You see, investment relates to the purchase of assets that are expected to generate passive income with the hope that over time the individual will receive back more money than they originally invested. I mean, that's just the mindset of every investor as well as every businessman. You go into a business to make more money. You invest to make more money. If you're not making any money, then why are you investing in it? You would not even try it. That is just the way it is. You invest because you want to make more money. You put your money there because you are hoping to make more money down the line, right? You go into that business quite alright to meet up with market or take care of that market demand as well as make money for yourself and your family. And you see, every investment carries risk. And also, not all assets actually end up producing a positive rate of return. That should be on your mind. I mean, that should be in your mind rather. All right. Not every asset that you invest in would end up producing a positive rate of return. It is just the bitter truth of the whole thing. That is just the bitter side of it. Like, yeah. So, I mean, many investments opportunity don't end up producing that bang that you were expecting before. They don't even produce not even a right? They just have this thin parallel line between deficit, I mean negative and positive. So you should put that in mind, bear that in your mind. And this is where we see the relationship between the risk and reward, right? You need to learn the types of investment and based on your age, your risk appetite and your goals, decide what works for you and what doesn't. Have short-term goals, medium-term goals, and long-term goals. What I'm saying is be familiar with the kind of investment that are available to you based on your current age and as well as know your risk appetite, know how much you're willing to let go should in case your investment doesn't go as planned, and as well as know your goals, create feasible goals, create realistic goals, short term, long term, medium term. Okay, and I believe you know what works for you. Do what works for you. Do not do what doesn't work for you, right? Because what is the purpose of going into something that you know doesn't work for you? You would end up um, squandering your scarce resources. Channel those resources into the things that works for you. Channel them into the opportunities that are made available to you at your current age. Be familiar with the risks that are involved and the reward as well. All right, and also know how much you're willing to let go and what you are aiming for. All right, you should know what you're aiming for as well. And I'll give you some of the examples of investments that you could check out and read on, explore, and hopefully I get a feedback from you guys, and you know, we take it up from there. So some of these investment opportunities include stocks, fixed deposit, bonds, mutual funds, equity funds, index funds, real estate, agribusiness, commodities, bank shares, cryptocurrencies, and so on and so forth. Right. So I mean, let's take the crypto market for instance. As of 7 years ago, Bitcoin wasn't as expensive, or the value of Bitcoin isn't as high as it is right now. If you were opportune to invest in Bitcoin as of 7 years back, I mean, right now you are a big boy. You would know what you're worth right now. So it is just like that. You invest to make more money. You should be able to foresee the future of your investment. Okay, that's just the way every investor thinks. And lastly, please bear this in mind: as an investor, you should buy when the streets are crying. Buy when the streets are crying, and buy when the streets are lively. What I'm saying is, you buy low, you sell high. When everyone is complaining and some people are willing to let go of their shares, you buy. But do not buy stupidly or buy blindly. Do not buy blindly. All right. So buy when the streets are crying and sell when the streets are lively. Buy low, sell high. Buy low, sell high. Buy low, sell high. On that note, I'll draw the curtain here. I'll see you in the next podcast. But remember, in all you do, keep it at the barest minimum and keep yourself out of trouble. Have fun. Go listen to some good music. You can go check out Kabi. He released a new song, Want Me. It's everywhere on Spotify, YouTube Music, Deezer, Tidal, and the likes, as well as Ashake from Nigeria. He released a new song, Terminator, as well as Fireboy. He released a new album. These guys, you can go look them up and listen to the new music, as well as Mr. Easy as well. So as DJ Khaled as well. Released a new song, Bono Boy, new album. All these guys are amazing guys, are doing amazingly well. So go look out for these guys, listen to their songs, stream some Afrobeat is the new lingo right now. So you guys should go check them out. Kabi, Mr. Easy, Ashake, Fireboy, Bono Boy, and the likes, yeah. So have fun, keep yourself out of trouble, and bye-bye. Thank you.